You're listening to AI Prism from Seoul Economic Daily.
3 numbers before the open. Samsung Electronics just posted a record quarter, and its stock still dropped 6.25%. KOSPI fell 5.35% today, its second straight sidecar halt, the 17th this year. And 599 stocks, that's 63% of the exchange, are sitting at 52-week lows, even as the index is up 72% for the year. Brokerages are pulling back leverage across the board, hiking margin requirements on Samsung and SK Hynix. Here's what that split screen means for your positions today. It's Thursday, July 9th. Here's what today's story could mean for the Korean market. Samsung's earnings beat already looks priced in, so gains are triggering profit-taking instead of a fresh rally. Brokerages point to leverage ETFs and margin trading as the main amplifier, especially the Samsung single-stock futures that surged after those products launched. That concentration in a handful of large-cap names is why the index keeps climbing, while hundreds of other stocks keep hitting new lows. Here's what the numbers show. Samsung Electronics fell 6.25%, or 18,500 won, to 277,500 won on July 8th, even after posting 89.4 trillion won in operating profit, about $64.8 billion. That beat Nvidia's market cap. KB Securities raised its Samsung target price to 600,000 won, about $435, from 530,000, citing memory supply constraints through 2028. Kiwoom Securities cut its Samsung target to 390,000 won, about $283, from 430,000, flagging slower EPS growth in the second half. KOSPI dropped 5.35% to 7,246.79, triggering its second straight sidecar halt, the 17th this year, while KOSDAQ fell 5.56% to 785, below the 800 line. 599 stocks, 63.4% of the exchange, hit 52-week lows this year, even as the KOSPI index itself is up 72.47% year-to-date. Kiwoom, Merits, Mirae Asset, and Korea Investment all raised margin requirements on Samsung and SK Hynix this month, some to as high as 100%. So what does this mean for stock investors weighing positions today? Earlier, we said Samsung's record quarter still triggered a 6.25% drop. That gap between fundamentals and price action is exactly why analysts are split on direction into the second half. Retail leverage flow has already shifted away from Samsung and into SK Hynix, so watch which single-stock ETF dominates the daily volume leaders. It's telling you where the crowd's conviction is right now. With 2 straight sidecar halts and margin requirements rising across major brokerages, any stock without earnings support is exposed to sharper swings if volatility keeps climbing this week. That's today's AI Prism, Stock Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifrah award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.